Hi there, my name is Savannah and I am a mortgage loan officer based in Chicago. I'm going to share some insider tips on how to get the best interest rate for your home loan. Whether you're a first-time home buyer, a seasoned investor, or a real estate agent, I think this video is going to be very helpful to give you some insight to share with your clients. So there's actually a lot of things that go into, determining your interest rate. A lot of times people ask me, hey Savannah, where are rates at today? And the answer could be, a point different for you than it could be for someone else based off of things like income, credit, the property type, all these things. And really what we're talking about when we're talking about factors that impact your interest rate are what we call in the mortgage industry LLPAs, or loan level pricing adjustments. So I'm going to break down what loan level pricing adjustments are and how you can control how to get the best interest rate based off of these LLPAs. I'm going to read the definition of LLPAs for you. So loan level pricing adjustments are risk-based fees charged by Fannie Mae and Freddie Mac, and these adjustments affect the interest rate you're offered based on your specific loan characteristics. Think of them like add-ons to your loan cost. Depending on your risk profile, this can kind of increase your interest rate or hinder your interest rate depending on where you fall. The LLPAs that you can control, the first one would be your credit score. So in the lending world, anything over 780 is considered perfect credit. Below that, there's different thresholds where interest rates might take a hit. So, 780, and then if you're between 740 and 780, your interest rate might suffer a little bit more. 700 to 740, your interest rate might bump down. So that's why it's really important when you're going to get pre-approved for a mortgage that you're keeping an eye on your credit, paying everything on time, not carrying high debt balances, et cetera, et cetera. The second major LLPA that you can control is going to be what we call loan to value, which is basically how much are you putting down on your mortgage. So depending on different down payments, your interest rates could, improve or suffer significantly. So one thing that we know in the lending world is that your interest rate is going to be very different if you're putting 3% down versus 20%, but sometimes even asking your lender to see a variety of options, for example, between 20 and 25%, interest rates might improve significantly. And if you're someone that has, extra assets laying around, it might be worth it for you to pour in that extra 5% to take advantage of a better interest rate. The third major factor that will impact your interest rate is going to be occupancy. So are you living there as a primary residence or an investment property? And interest rates are always going to be better on a primary residence versus buying an investment. The next major LLPA is going to be the loan purpose. So whether it's a cash out refinance or a purchase or just a rate and term refinance, your interest rate options are going to be different based on those. So here's a recap on how you can make sure that you're getting the best interest rate. Improve your credit score as much as possible before you get pre-approved or apply for a mortgage. If you put more money down, your interest rate might be better. Am I always a fan of putting as much down as you possibly can? Not necessarily. When I bought my house, I put 3% down, but if you put more money down, you might get a better interest rate. If you're buying a single family home, your interest rate's gonna be better than if you're buying a condo or a multifamily. The most out of control thing that affects your interest rate is gonna be the market. So that's another thing to consider when you're looking for a home. If you last talked to your mortgage lender about interest rates and numbers for the properties you're interested in a week ago, interest rates can change, day to day significantly, especially in the volatile market we're seeing now. Interest rates on Friday are going to be super different than interest rates on Monday. So make sure you're in constant communication with your loan officer about where rates are at today. And one thing that I also love about working at A&N Mortgage here in Chicago is that we have what's called a float down policy. So you can actually take advantage of a lower interest rate if the market improves between when you go under contract and when you close on the property. We will be able to drop your interest rate down one time at absolutely no cost to you. So that's another reason why who you work with matters. And yeah, if you have any other questions for me, feel free to reach out, DM me, call me, text me, and I'd love to help you.